Hello, welcome to another video of ES Futures Trading. I am going to play a replay of today's. There's something something very important that I want to highlight today, and is the relevance, the importance of doing your homework. Every single day, doing homework is very important. It's very tedious to do it every day, but it is really important. It is really important. It helps a lot when you plan your trade or when you plan your day, and it helps you to have vision of the market, what's happening in the market, and gives you some gives you a panoramic view of what's going on. This is the day. These are the charts. These are the market profile charts before the day started. Okay. What I have here. This is Monday session, and this is today's overnight session. Notice I haven't put any references here. What I'm going to do, okay, what I'm going to do is I'm going to copy my references. I'm going to copy my references and I'm going to explain. Copy references areas and put it here, alright? Paste references, okay? These are the references that I have before the market started. And to understand what I did, okay, I'm going to show you as well the charts. These are the monthly charts. This is the let's put this. Let's start with the adjusted contract here. This is the adjusted contract. Okay. I'm going to extend this to the left instead of to the right. Okay, my bad. This market was trading in a range. We have an upside breakout in the monthly time frame. We have a trending market to the upside. Notice this trend line here. How beautiful this line is here. I apologize for the dog. The dog's barking. And notice that you just move this trend here. Move this. You can move this trend upward. There was support, and now the support can be here. Look at this. You just it is still being traded. There was some odds that the market could have been bought here, but this is not the reason. Okay, the market was, I thought was bought today, and the daily had this formation with to what I believe at the time was short covering and upside extension from the short covering rally here. This is the day. This day here is the first day of the new contract, of September contract, and hyper extension to the upside. The interesting thing is here in the weekly. I'm going to move this one down. Awesome. I'm going to put this down here again. Okay, in the weekly we have an inside bar here. An inside bar, the traders go with the breakout of the inside bar because an inside bar is a form of balance, it's a market imbalance. Balance and excess are the two most important things in trade. I mean short-term trade. The balance, the breakout of this inside bar, okay, go with the break. But to monitor, the next thing you do is you have to monitor for continuation here. The next thing the market has to do here, if this market if the market takes or takes the lower side out, it needs to reach the lower range or the 2-week range. We have a 2-week range here. The trade here is the first part is this low. And remember, this is not a gap. This is just a glitch on the matrix here. Now I hope these contracts are adjusted. There is no gap here. There is no gap here. This is a continuous market. And why? How do you know that? Is when you actually do move to the new contract. Yes, U23. When you move to the new contract, you actually see, right? There's no gaps here. No gap at all. No? There was one here that was closed right away. And you can see right here, right? You can see this 2-week range here. Continuation, we have this low here being taken. And these references, this is a breakout, after breakout. First breakout happens after this level, second breakout happens after this level. It could be something here. If the market re-enters this range here, re-enters this breakout here, you have to look both charts here. And notice how market was getting too short here. You can see here high after high after high after high. There's a lot of stops here, lot of stops here, lot of stops here, lot of stops here. The market was very extended to the upside, and the next thing the market does is either does a rebalancing of inventory, in this case long inventory. And to do that, the market needs to do a pullback. And the second piece of information the market is giving you is these lows. This is volume. The market, the lower the market goes, the lower the volume is having. This is a sign that this could be just long liquidation, or could be some rebalancing on inventory rather than selling, than more serious selling here. It could be. That's what I was thinking. But the break, right? Market after this rally, everybody was looking to the downside now. Meaning everybody short-term traders. Now let's go back again to the ES. Okay. We got breakout here, and let's check now market profiles. Okay, I guess I can. How can I do that? Okay, I guess I'm going to pull my homework itself to. This is what I have from yesterday when I got market profiles. Very wide profiles here. Wide profile, wide profile, wide profile, wide profile. Thin profiles here, and especially this one. I guess this was FOMC, or I don't know. I don't remember what this was. It was very elongated to the upside and multiple distributions here. I think it has 3 or 4 distributions with this high here being the closing of the distribution. Okay, and the market low from yesterday was bought exactly, okay, exactly at this low. Now, what that is also important, okay, I'm going to clean that one. Something very important from yesterday was this spike here to the downside. And it is a spike because it happens too late too late during the session. Too late during the session, okay, to be, and it's like a test, like a probe that the market does in the lower side. Okay, let's check down here. Now imagine if the market was coming lower and didn't have volume, and still it throws another probe to the downside. Okay, I was looking to the downside here actually, right? But the spike here, when the market opened today, I saw inventory getting long, sellers down here, 100% over the overnight inventory long. There's some rebalancing here, is still long. Okay, and I was in this part. Okay, this is getting interesting here because the message here, if the market opens inside this area, which is the spike, it means that the lower price, this is the hardest part for me. It always has been the hardest, always gave me the hardest times here. Because it is kind of like a neutral, because the market hasn't made up his mind yet, Okay, this is the market is accepting lower prices, rejecting lower prices. If the market opens here, it opens below the spike. Okay, lower prices are being accepted, and the market was breaking here. Okay, and it started trading. It started to being bought here and open. This is the most important thing. Open inside previous day range, not inside the spike, but inside the range. Opening inside previous day range, advertise chop, advertise a rotational market. The closer to the center, the higher the odds of chop. Where is the center? Up here, POC, kind of like a wide POC as well. All right, those were the two things. Okay, a spike being rejected, opening inside previous day range, and inventory very short here. Okay, notice this day here. This overnight session, the market closed at the high, market closes at the low here, and the overnight just sells. The next day the market opens all the way below previous day low. Very emotional selling here, very emotional selling. And remember, yesterday we were talking about this as well. Every time the market had a gap, the market closes the gap. It closed here, it closed here, it closed here. Right? 1 day closing, 2 days closing, 3 days closing the gaps. That's a sign as well. Okay, it's telling us, the market is not as weak as price is advertising. Okay, it's not as weak as price is advertising. The inherent risk in the market is not being reflected by the big. The market has formed a 45-degree line. Risk to being short is increasingly high here, even though value is overlapping to lower. Okay, those are parts. There's contradicting or mixing information here. Downside continuation has two non-excess lows from 9 and 12. What are these ones? These lows here. Non-excess here and non-excess down here. And I consider these ones to be the most important ones, because this is when the September contract actually start to trade. Okay, volume comes up here. There's nothing here in these days. You start at 9 and 12. That's why I am paying attention to those 2 days. Right? This could be the ultimate destination of the downside trade. Okay. The risk of being short is very high. And why I say the 45-degree line here. 45-degree line. What a 45-degree line is a market. Is when the market sells. You can see it selling coming here. Start here, right? So, and it's being pulled back to POC. Selling comes back to POC. Sales come back again to POC. Sales come back to POC. Okay? Sales all the way down here comes back to POC. Can you see? So traders are selling the market. The market is trying to break, but it's not, you know, the traders are not having the back, any reward for their efforts. The risk of being short is very, very high this day. There was something like that happened here as well in this day. There was a mini 45 here, half of the day here, and something similar happened this way this day. Low liquidating, short covering, and most of the trade, the liquidation happening in the overnight, which puts the short inventory in hands of the weaker strategy traders. Now, nobody knows, okay, when the short covering is going to happen. When short covering is going to happen. There's not a bell out there that tells you, that rings to let you know, okay, we are going to short cover. We are short covering here. No, there's nothing like that. Now, let's check. Let's go back to this day. No, something else that I have from yesterday, but that is very relevant. Okay, we have something here. This day, this low here was a weekly low. This is previous day, previous week low. Remember the 2-week range? This is the weekly low. The other one, the range of the 2-week low is this thing. This was very important to me as well. Okay, downside continuation, we see acceleration here and towards this range here, and rebalancing guidelines being reapplied here. Okay, that was one thing. And this one was very important as well. Okay, because this is the low of the inside bar. Remember the inside bar? And it played an important role today. Now, from what I see, what I saw here, you can see here, there's some momentum trading, and there's just a lot of congestion here, lots of congestion. From yesterday, you have these levels. Come on, what happened here? I'm going to copy this one, okay? Again, because this I can't see this one. Let me show what the copy references areas, and paste reference. Okay, down here. Now, another thing I got to observe here. I have put these areas here, these ranges, as a relevant for I mean, this is not relevant anymore. This one, no. Why I think it's relevant? Because there is inventory here. This inventory has been corrected here. Oh, come on. I didn't mean to do that. I mean to close this. Okay, this is the low. This is the gap close. Now, why I have this one? You can see the way how this is sold. Those are just areas that can be used by the market for references, either to buy or sell. I'm not saying the market is going to be bought or sold from this level. No, I'm not saying that. It tends to come to these areas, and that's why it tends to be bought and sold from these previous references. And use that, if I have a trade, you have a short, you have a long, that's the area where the trade could have some problems. This happens to be also the base of the spike. When the market has a spike to the upside, everything, Remember what we also, this is another piece of information, not for a short time frame, maybe for the daily, is as long as the market keeps building value above this spike base, the market is still to the upside. Yeah? The spike here is not being rejected. There's a lot of trade happening in the spike, in this spike here. This is a breakout. That's why I have got this thing, you know, the spike base, and daily breakout. And potential areas to monitor for downside continuation of this low here, and this, you notice how this area has volume, right? The market built value for 4 periods here, and the August high down here. And I just marked all the way down to here because this is the first day of the new contract in here. All right. Now, let's go back to the replay. This is the replay that I have. You know this reference. What are these references for? 2-week range low, the weekly low. This week, right, we have an inside bar in the weekly time frame and this low here, okay? Because what can happen here is the trade is go with the breakout. Go with the breakout of any inside bar. Preferable in the direction of the trend. What is the trend here? The trend is to the upside. Okay, the trend, there is a correction in progress, but the trend is to the upside. Right. So if there is a breakout to the upside, go with the break. And then the next thing, monitor for continuation. Monitor for continuation is having downside stage. Now, if the market has an inside bar and it's selling, for example, what are the odds here, right? You're getting inventory very short here. You have to think as well. The market may be getting too short to keep going lower. May need some rebalance, some form of rally to keep going lower. If that's the direction the market is going to take. The market is outside of balance in the monthly. Can you see this balance? The market is far. Really have kind of like respectable. This it was down here. It was getting closer and closer to the breakout level. Right, this breakout level is the same. The weekly and day and monthly, you have that reference. In the daily, you don't have that. It's a little bit lower here. Okay. Now, the next thing is the replay. I'm going to start playing. Well, this is 30 times faster. I'm going to go all the way down to 1 here before the opening. Oh, something else before the market opens. Yesterday, the market sold. The selling came very mechanical from Halbach here. You know, Halbach is down here now, but at the time it was here. Halbach here. Settler was here to the tick as well. Mechanical level. It wasn't Halbach. This is not Halbach. Halbach was up here, and when the market has this downside extension, is that Halbach moves down here. I put this as a 3-wide mechanical high here. Very mechanical high. Market was selling from this 3 times. Why is important to me? Because there's a lot of stops here. If the market is going to go lower, I mean, these things can pull the market back, can push the market higher, just to repair this high. If there's something here to the upside, I would want to monitor for continuation. If the market takes or repairs these weak levels here, if there's upside continuation, there could be something here, or it could be the market just repairing this and then keep going, keeping its break towards the downside. Remember the non-excess lows, non-excess low here and here from the 9 and the 12. All right, let's keep playing this. I have no idea what's going to happen. Notice where the market, how far the market has been pulled. It is the first thing, right? The spike has been rejected here. It's being rejected at the opening. Okay, so what do I have here? Opening inside previous day range, advertise shop, increase the also having a rotational market, have a weekly low here as an important reference, which is this low. Okay, this high is no good. Right away the opening. You want to be a seller? Don't be a seller from this level. Okay. Let's see if the market picks a steam. It's kind of quite a movement. Quite a movement now. Remember, inventories, overnight inventory is absolutely long, 100% long. If there is a correction to the overnight inventory, remember one of the most popular trades out there is correction of overnight inventory. What is the correction of this overnight inventory being long? A break. Okay? A break. What happens if you don't have a break? So the market is just don't pay attention to the overnight inventory. Okay? And who's going to do that? Kind of short-term traders? I don't think so. I'm not pretending nothing here. I have no idea what the market is doing, what the market is going to do, or what's going to happen. No, sir. I have no idea what's going on. I am as neutral. I want to be as neutral as possible. No, I don't have any references here. What can be something here? Maybe this one? What is this area, for example? This POC, right? Yesterday's POC is right there. Again, mechanical selling here. Mechanical selling up here. Mechanical selling up here. All the highs were being sold mechanically from previous days. So this is not a good reference here. Now, remember also from yesterday what you have here. What you have here, here, and here. I was expecting, to be honest, I was expecting one day with high volume, right? Remember, we have no volume here, no volume. Every time the market goes lower, the lower the volume it is. I was expecting maybe someday with high volume, okay, but a very wide POC, very wide POC. Traders trying to break the market. Trying to break the market here and building value at certain level, and then that level could be forced to cover. The market traders trying to go short and failing in his attempt, and then bigger traders just buy on top of them and use once the market picks momentum to the upside. Shorts are just forced to cover. Now, what is the context as well? Something else we have consumer confidence at 10 a.m. We had consumer confidence at 10 a.m. Tomorrow, Jerome Powell speaks at 9:30, GDP on Thursday, 8:30, and PCE on Friday. I guess the most important number here is PCE on Friday, and Chairman Powell speaking. Can you see what's happening now? How slow this market is trading? Difference relative to yesterday. I'm going to go to 2 times. Only 5 minutes here. Okay? 3 times faster here. This high has been taken. What do you have here? Again, POC. Mechanical high from this day. What's happening with the overnight inventory? Nothing. This low selling from POC or buying from POC. This level has been corrected. We have a weak reference from the lower side. What do we have in the upper side? This level, but more relevant than this is, notice that this is an overnight high here that has potential to the upside just because there is inventory here, mechanical shorts here, selling from yesterday. And traders do what works until it doesn't work anymore. This is not a good. I wouldn't like to be a short here. And also, very risky. Remember from yesterday. What it is. You have to be aware of the risk. Now high has been taken. Selling now. Boy, why? Notice where this market is. It has been sold from settle yesterday. Very mechanical. Now it tells you who is doing the trade, right? And again today, maybe not a reference from yesterday, but value area high from yesterday. It's just a mechanical way to sell in the market. These are not serious traders doing the selling here. And you know that from the yesterday, from the previous day also, and also it's been kind of like confirmed by volume. Overall volume is very low. This 3Y mechanical high has been corrected. That's history. We are 5 times faster. 15 minutes into the period, and you will see that volume is about the same. It's going to be about the same. About for the first, second, third, fourth period, about the same. So it's not too much. Right? About the same. Like 3 or 4% higher, not that much. Taper on the upper side. Taper on the upper side. Volume, buyers just dry here. Okay. So overnight high has been taken out. Now, let's take the overnight low now. Why do I say that? Just because that's the most popular trade out there. Overnight inventory. One of the most popular trades out there. Okay. Where the market is being bought. This day, this low has no relevance by itself because it has been traded multiple times already. Okay, 1, 2, 3, 4, 5, 6, 7, 8, 9 times has been traded through. So there's nothing on this day, but it has another time frame for which is very important, which is a weekly low. It's the lower side of the range of an inside bar in the weekly time frame. That's the importance. And what kind of traders are the weekly time frame traders? Do you think are as strong as the daily time frame traders, or as the short time frame traders, or maybe stronger? I think they are stronger. I hope you agree with that. Two times been bought from the weekly low. I'm going to speed this to 10. Okay. Volume. Notice how value is inside value. It's inside this area. Yesterday value was higher, opened higher, and moved all the way to overlapping to lower. Right now was inside value. So this day is in perfect balance with yesterday. It's in perfect balance with yesterday. Kind of like a continuation of yesterday's trade. So what happened yesterday at the closing? We have a spike to the downside. This inventory is being corrected. It's being removed. Shorts here are being removed. Look at the low, where this low is happening. Mechanical low. Now it's been corrected. Okay, let's take the low here. Let's take a low. A lot of chop here. Lots of chop here. The closer to the center, the choppier it is. Chop is can be very costly. You can lose a lot of mental capital here. Mental and financial capital here. You can recover from financial losses, but once you lose your mental capital, it's very hard. Okay, low has been taken here. So, okay. So the trend is to the downside. You got a weak selling coming from this day, and the trend continues. Next thing, overnight low, but notice where the market is bought here. Last, which happens to be also value area low. Very mechanical level for a buy. Okay? Wow. 15 minutes, half into the period, and the market is above halfback. It came down all the way down to here now. It's a lot of chop here. Lots of chop here in this market. Going lower, going higher, going lower, coming back to the high. Market hasn't made up his mind yet. Volume dry here, volume dry here. There is some accumulation action here in the lower side. Let's see what the histograms have. But what is the history of the histograms here? Notice just momentum here, and some volume starts happening. When you see this, you want A, B, C. This is third period. Okay, there's bigger volume here. Bigger volume here. The thing is, for example, these are trades about 50 that I have here. Now there could be something happening here. Not just once, but something. Somebody wants me to see this. Right? If I can see this, everybody can see. Yeah. Something can happen on those areas. What direction? I don't know. I don't know what can happen. The key here, one of the key elements in trading that we have to learn is monitoring for continuation. You got a short, you have to monitor your trade. That's the most important thing. The market is doing what you think the market should do, or the market is not doing what you think it has to do. Okay. Wow. All right. Next thing, what the traders were doing, selling the rallies, right? For the last week and a half, the only thing that happened, traders were selling the rallies. That's what the traders were doing. Let's see another rally here, another rally being sold. Please don't tell me that you are going to come back down to here. Notice that this is halfback, okay? It's halfback. No way. This is a weak level here. It's halfback. Okay, I'm going to mark this one, halfback. Okay, sold from or bought from daily halfback. Okay. For the I'm going to carry that piece of information here. And it's also weekly low. But most important to me right now, halfback. Because it tells me what kind of traders are here buying this market. Very mechanical trade here. This high is not particularly a good one. This is very weak, remember? It was sold from daily halfback yesterday, and now it's been bought from daily halfback. Next thing sold from saddle, mechanical level up here. From yesterday, from previous day. Now, which one is going to be taken next? Monitor for continuation, okay? The trend, okay? The thing that I see here is this market try to go lower. C ends the movement, ends the action to the downside. you know, ending, killing the downside movement very early in the morning is a sign, you know, it's something that increases the odds of having a rotational market here. Now, if I was looking to the downside, this is something that tells me, okay, I have to stop doing that. Now the odds of having a rotational market are higher, okay? Because, and that is market going higher, market going lower, market going higher, and that's rotation. Right? That's rotation. I mean, rotational market. This high is not particularly good, this is not good neither, and this one is not. You know, signs of mechanical trading all over the place here. Remember the overlying inventory, remember previous inventory. Market is very short. The risk of being short is quite high here. And I had to confess that I was looking to the downside here. Remember, huh? When the market, when I woke up and saw the market, oh, okay, after all this movement, after all this overnight trade, the market could open inside this range, which was actually a negative sign, right? Negative sign of market opening in here in this area, which is the base of the spike. That is something. Now the spike has been rejected. Okay, this is not a reference anymore. Has been rejected, totally been rejected. Okay, so this is a positive sign now, which was negative first. No, but there was some odds that the market could open in here, which was a negative sign. The market opened upside and upside of the spike. And not just that, it didn't even come back. So now it's a positive sign now. The spike to the downside, the probe has been rejected. You keep adding more information. This high has been taken. This is not a reference anymore. No, notice that there's a couple ticks, but still, right? There could be something here. They are not out. All of them are not out. Now, this upside extension, notice what it does to Halbach here. And Halbach was down here, now it's higher. You know? That, when the market has this kind of movements, you can actually lose or miss this thing. You know? Quite easy. This low is questionable. I'm going to carry this low as a questionable low. I think the market got too short to keep, to break further, to break more. That high is not good. Notice where the market is being sold from, and I got a breakout here. It's been bought from this level here. None of these were good. No, there's a correction now. This low is better now. This high is not good. Remember also this low is not good. Buying from Halbach, okay. Some liquidation here. Looking towards this one, and this one. Okay. Why I want to be short? The question is why I would be short in a market that is going to the upside. Okay? Traders are getting used, we're getting used to be short in this market. Market is going to break, market was breaking, market is selling. Okay? But this is going to the upside. You can see it here. Goes to the downside. This ends the trend. And why you want to be short here? This market is going to the upside. This is going to the upside. Why you want to be short here? Trends ends here. The upside ends here. Then goes to the upside. It ends here. Multiple times. This is session at one time higher. The trend ends multiple times. And now, there's a trend here. An intraday trend to the upside. As long as the low or the current period doesn't take the previous period low out, is a market to the upside in the short term, right? I'm not talking about the daily, the weekly, or monthly. I'm talking about because I am not a daily or weekly or monthly time frame trader. I am a short time frame trader. Okay, why I be short this market? If I have a short here or here, I mean, somewhere in B. Okay, this is the market letting me. It's giving me 60 minutes to get out to close my position. Right, 60 minutes because it's going to the upside. There's no signs here. Okay, now things change here. Right, halfback is up here. This was halfback before, and this one, you have two ticks on. This one actually corrects, repairs this low, this weak low. There are still some shorts here. All of these longs here that while buying to try to get the market higher were weak longs. Now this is a big pullback to the down. The big pullback here that removes the whole range of C. Looks above and fails. Right? Looks above this period and fails. Looks below. Okay, it's going to fail. It's going to have downside continuation. It's going to establish a trend to the downside because the upside movement, the action to the upside has ended here. Let's see if there is an action to the downside. What needs to happen that the next period, is not going to take the high. That's the thing. Right? I'm still looking to the downside here. Very, very questionable. Remember the odds of rotation are high in this market. The market is having rotation here. A lot of chop here. Lots of chop here. There's nothing clear here. If you look too close at this moment in time, you have forgot about how weak the short inventory is in this market. How risky it is to be short in this market. You don't remember those things from previous days. You don't remember those things from your homework. If you actually do your homework. C low has been repaired. This high as well. This high, A selling from belly area high has been repaired as well. This high is questionable, and all the selling coming from previous day halfback as well. The context. Okay. Selling. Notice where this market is being selling from. Exactly from that reference. From the previous day, right? I didn't put the right reference there, right now. I have that from yesterday. And who is selling from that? Who sells from those mechanical references? Do you think serious money is going to be selling from that area? That high is weak. This low is weak as well. Okay. But context, how short is the market now? We are still inside previous day range. Also, rotation are still high. Okay. Now the market is having some movement. I want to see some value is inside here. I want to see, notice where this period opens, right? If there is something serious to the upside, this distribution will not be closed. Okay? Closing the distributions, nada. That's how you monitor. Okay? You got a long here, somewhere in here. If this distribution is closed, that's a sign that there could be problems in the horizon. I'm not going to tell you where to buy or where to sell. But I'm trying to teach here, the thing that I'm trying to spread, the knowledge that I'm trying to spread here is how to read markets, understand inventory, the situation of inventory, overnight inventory, market inventory, being too short, too long, rebalancing, excess, markets imbalance, and you will come with your frame you will choose your time frame, and you will find out what kind of trader you are. And you will see, once you understand the markets, you will find a way to find your way of trading. Okay, let's go back to the market. If there is anything serious to the upside, the distribution, the market will keep these distributions open. Okay, we'll keep this distribution open. Let's see what's happening. This has been corrected, by the way. This is not a reference anymore. You have some high volume from previous day. I guess was this day or this day. I don't remember exactly, but there was some high volume here. For me, these levels also could carry some relevance, but more than this, actually, is the 4400 here. Okay, there has been a lot of trade going on around the 4400 because those are century numbers. I remember the reference on the upper side. What are the references on the upper side? Century numbers as well, 45 and 46 from our homework. If I have a long, this is where I would be very careful, okay? Because if there's any problem, it's going to happen around these numbers, around these round numbers. Okay. I would expect some trading, some selling coming from 4400 here, some rebalancing on inventory. The first times is usually sold, and then after that, nobody knows. Have you? I bet you have forgot about this distribution already. Oh, okay. There's another distribution here. That's a sign. The market is becoming very emotional now. Okay, let's see if this distribution closes. When a market becomes very emotional, that's a sign. Okay, what's happening? What could be happening? All the shorts from the previous days could be, all these shorts here, this overnight here, this day, could be, there could be forced to leak, to cover, not to liquidate, to cover, because they are short, right? There can be a squeeze also. There could be a squeeze, because there is always, in this case, there's always shorts that don't close their position. Okay, the market is going to break. The market is going to break. The market is going to go lower. I'm not going to close. We are so close to the non-excess loss from the 9 and to the 12, from the 12. The market is going to go there. It has to. The market doesn't have to do anything. Right? The market doesn't know what it has to do. Now, the market went, at this moment, I think this is too much already. Because we have 3 distributions here. 1, 2, 3. Market becomes very emotional, and that's a sign. That's a sign here. That could be the end. That could be the end of the trade right here. Right here. It's just too emotional now at this moment in time. I might be expecting some selling. Let's see what happens here. F. This low here is a weekly low. But the most important thing here is that this period remove all of these pullbacks are very scary. How can you be long in a market that retraces the whole range of the previous period? Okay, 4400 has been bought. Is coming back? Is the market coming back? Now, there is a breakout here now. There's a breakout to the upside. The market has checked this high out. It's going to have now balance. We reapply the balance guidelines here. The market can do a couple things here. You can look above and fail. Failing back inside, the market falls back inside in this period or the next one, targets the opposite side. Upside continuation has this reference in the upper side. Remember the short inventory being in hands on the weakest traders, the overnight traders mostly. Not a good low, not a good high here. Now you have 1, 2, 3 three periods highs here. 3 highs. There's a lot of stops here in this area. Remember the daily. A bunch of stops here in these areas. When this market was pulling back here, remember C. I bet you forgot that one. Because I did. Remember this volume here. Yeah. These traders are still in the market. You know, when the market comes down here, they still buy here. They are still in the market. This volume here, this higher volume. These are different kind of trades here. These ones. We have more here around 4,400, just below 4,400. More here, different kind of trades here. And this one is expected always, right? Because this is the closing. There's some rebalancing at the closing, always. Alright, let's keep playing this 10 times. It's not that bad. I'm not saying it's good. I'm just saying it's not that bad. Notice here, now how long this market, this is short covering. Notice the distributions here, 1, 2, 3, 4 distributions. Okay, it was risky, you know, being short was very risky in the market. Now, being long is super risky, very emotional buying here. Well, I have seen what I wanted to see now. G. I'm going to go to 15 now. Mechanical selling again. Another breakout here can't happen. This volume history here was 4,400. This one is nothing, has nothing in here. There's no other reference here. I want to see what happened when the markets comes back to this area. And there was a lot of volume here. I remember about 1,000 or 2,000 blocks. Not 200 or 50s, but about in the thousands. This high has been repaired. As this is not a reference anymore. This is not a reference anymore. All of these stops have been taken. There's more stops here. Where's the next one? Up here. 622. With overnight, with emotional selling in this date, the 23rd here. The next reference in the upper side are actually very weak trading here that happened, because these references are from the overnight. There was a liquidation. You know, remember when the market closed way up high and it opened below the low of the range, the 23rd. I don't remember what day is, what is the 23rd. It was Tuesday, something last week. This distribution has not been closed, huh? Look at this. Closing this distribution here could add or increases the odds of some range trading here. All right, this could be an inside bar. If the market closes, if the bar closes here, this could be an inside bar. What is the trade from an inside bar? Go with the break over the inside bar, preferable in the direction of the market. To be an inside bar, no, this is not an inside bar. This is not. This high is not good. I If this is real, there should be a spike here to the upside, like a quick burst to the upside. And you know there's this. You have this inventory here. Yeah. Do you see it's gaining momentum to the upside here. Stops right here. Come on, man. Why you stop there? I still haven't seen, this high volume. What could happen here? Either these are shorts. There could be some upside, some retracement, and then trade sideways here, and then come back to the downside. Another distribution here. My God, how many distributions now? 1, 2, 3, 4, 5, 6 distributions here. It is super risky to be long here in this market. Now, this high could be inside the 622 high. Very long over, very long in, market is very long here. It's too long. This is not a reference anymore. I haven't seen a spike yet. Why I look for those things is because sometimes that sign as the end of the movement. You have some quick. When the shorts. That's when the shorts throw a towel. You have a really quick burst to the upside. It goes to the upside. That's shorts. Throwing the towel. And if you are not aware that traders may want to go long in that without understanding that actually can be the end of the movement, because it is just a short covering. It's not serious buying, and you can see that from the volume. In this moment in time, volume started to increase. 1, 2, 3. You don't have volume down here. You don't have. Oh, my bad. We don't have volume down here. Volume started to increase at the latest periods of the day, when the market was being hyperextended. 7 distributions. 1, 2, 3, 4, 5, 6, 7 distributions here. My God. My God. Oh my God. Jay, could the market come target this high? I mean, this is too elongated to the upside. The overnight distributions have been closed, which targets the opposite side of that distribution, but it's overnight. It's not too much volume. What I mean with that is, this is 632 overnight distributions closes this distribution here. I still have some volume here in the upper side. Prominent overnight persist a 2-day range high. Another gap low, gap close. No way. 8 distributions. Gosh. This is, God, man. Super crazy here. K. We're on K. I'm going to go faster. I'm going to go to 20 now. This day is super innovative here. And notice the tempo now. The tempo has a slow, very slow tempo now. There's a lot of congestion here. This distribution has been closed. This low is, come on. This is not good. The market can come back and check this one. If it closes this distribution, it could target this low. And now this could be the end of the movement. Laggards coming here. I mean, who's going to buy from this level here? This is laggards. This is laggards. That they saw the market going higher from the morning through noon, through afternoon, just 1 hour before the close. Okay, I'm going to go long. This market is going higher. I'm going to buy here. Tempo has slowed considerable here at this moment in time. 3 times faster. Come on, this low. Stops. This could be a good place to be short here now. I wouldn't. I mean, I remember this, okay? You don't find momentum. The market hasn't changed yet. You are going to be short. Do you want to be short in the market that's going higher? No, sir, I won't. I will never find momentum. I will never stop in front of train. That's what I say now after so many losses. I was crushed for the market. I think I learned my lesson. The market's to the upside. And this is just rebalancing, rebalancing on inventory. There are all the loans here. And this inventory is being rebalanced here at the closing. This high is not good, non-excess. Sometimes the market is too long that leaves this kind of excess, but this is just a sign, no? This is another sign that the action to the upside has not been completed yet. Has not been completed, but the market could have got too long, could be too long at this moment in time. Come on, look at these lows here. 1, 2, 3, 4. If this market doesn't take this high out, a good odds that there's going to be some serious liquidation happening that can happen here. Okay, market it didn't take it low. Now it has a level of super weak low here. The action to the upside has not been completed. Okay, I have this level as a weak level. This one a mechanical level, and this pullback here. The base of the rally. Okay, the base of the rally is a mechanical. It's a mechanical base, and the daily low is very mechanical as well. I'm going to close this. I'm going to, basically, how do I do my homework? I'm going to close this. This is, I'm going to use a weak or mechanical. Mechanical 628 low, which is weak. This area, I don't know why I highlight. Oh, the spike was rejected here. Settles not here anymore. Spike base is, if this spike base is from this day. Okay. The spike has been tested. This I decided to leave it here just to remember myself of why I consider this low being a weak one. This has been repaired. It's not a reference. The 4400 remains there. This is not a reference anymore. This is not. This is irrelevant. This is, come on, very mechanical, man. This is no serious money in the market, okay? This is poor. Let's call it non-excess. Non-excess 628 high. Here, mechanical high. Notice what do we have here? Stops, right? This high is adding more stops here. Can you see that? There are stops from today, there are stops from this day as well, and there's a very wide overnight POC. It's too far back now. It's not that relevant now. This high was good actually. There's a good excess here, but this high has weakened this high, and the gap up here. Remember, there's all of this inventory coming from this 3Y mechanical selling. That's super weak inventory here, and we were talking also about how this high could be questionable. So, but now it could be some factors that are playing here. My inventory being too short. We have Chairman Powell speaking tomorrow, and let's do homework. Let's do the homework. How do I do my homework? Okay. Inventory was for this is the overnight. Volume a little bit higher. This bond, I don't like this market, the bond market here. It's very risky here. Gold capital is coming out of gold. The next thing I do is I take my I check my histograms here, and this high has been reached here. This is out now. What do I have from this day? I have this level here. Come on, gray, right? Let's pick up gray here. Gray, I use gray to, as I said, this is weak. Why is weak? Because it is previous. It's a weekly low. It's not weak necessarily. Notice how volume came here, below. There's a lot of selling here. There's a lot of selling here, and these sales were forced to cover here upside. Notice this is profile, right, from the histogram. I mean, from this period, volume is in the lower side. Here is in the upper side, kind of the center, the lower. These shorts are being forced to cover. Shorts, you can see traders here still short in the market. Now they change their mind. Let's go long now. Indecision here. I'm very, I don't know. Here is some rebalance, Notice how this side, this is weak here. It's weak. You have 1, 2, 3 weeks, 3 lows, matching, 3 matching lows here. This inventory here is in risk of being liquidated. Now, from crazy, total craziness here. Multiple distributions here. Multiple distributions. A sign. What is a sign? Emotional decisions are usually bad decisions. Okay. What do I have here? This area is weak. This is not good. There's some shorts here. This is short covering, right? Short covering weakens the market. This is short covering. This is a weak market. What's happening here? Shorts being forced to cover as well. So this is short covering. So you can see very emotional markets, right? Yeah, kind of like a, it didn't happen from the opening though. Now, let's see if there is something to be seen here. Let's see what kind of information this histogram can give us. Alright, I still have this on the lower side. This is a non-excess low. This is non-excess low here. We have no excess in today's trade. Is this today's? Yeah, this is today, right? We have no excess here. And there was it. No. Got a gap here. There's a gap here. Sometimes the market aims to the center of this gap. Sometimes the gap is not closed right away. There's some selling that happens first. This could be where the market is directed. The other possibility here is the market just get too short. That there's some rebalancing in the short term. This is to keep going higher. But now the trend to the downside has been is over now. Okay, this is a new market now. It's a new market. Yeah? Everything that was pointed to the downside when I was looking to these lows now are over. Right? They are still here. These ones have not been taken out. They have not been repaired. They are still here, but now it's different. The markets. This is another market now. Yeah? The option to the downside in the daily time frame is over. In the same way, how you remember this market was going to the downside, and this period takes this high out. It's happening now in the bigger time frame. The bigger time frame, the option to the downside is over. Okay. Now, what else do I have here? I'm going to take a screenshot of my time frames, my multiple time frames here. I have decided to go together. I'll put this one. I have a new range here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 day range here. Another range here. We have a downside trend in the weekly. As long as this high is not taken, as long as this high is not taken, there could be a change in the weekly time frame. The monthly is the last one to reflect change. There's still the most important thing in the monthly is the market is above. It's very high above the high of this range. Monitor for continuation. Let's take a screenshot of this thing. That's one. And I want to do another one. Either I can see any difference. There is something here in this time frame. Yes, so there is something here. in the daily time frame. What is this? This is a breakout here that's been tested. No. I guess the test would be this low here. This is the breakout. The market breaks out of this range, then comes back and retest it. Let's test this level. Could this be testing? I think it would be more. It would be of more relevance. This okay. This. Let me check. Let me remove this. This breakout here. To me, it would have been more relevant if this breakout has been taken, has been tested, not this one here. This is not a breakout. This is a continuation. Okay, so that's a sign here. This could be a sign of strength. Here, the market has no testing here. It also can tell me, okay, this is not serious. This is some weak shorts being taken out before the market can break further here. The market just got too short. It needs to remove this inventory to keep moving lower. That's one something that I need to be aware of as well. Now, all of these longs here, all of these longs have been removed. When the market comes down all the way down to here, they are out now. And these ones are new ones. Are these stronger? That's the question. Are these longs here that are coming, that are taking the position on these, or the ones that were removed, are stronger than these ones? Okay, think about that. We will answer that question. We will try to answer that question when we go to market profile. Okay. Now I'm going to this is Wednesday, June 28th. Okay. I'm going to take my charts here. This is the ES. Is that what is it? Should I write it that way? Yeah, ES, and this one is the ESU. This is September contract. This is the adjusted. This is the new one. Okay. What is the monthly? What we have in the monthly, which is this one. What can I say about that monthly bar? Breakout level has not been tested yet. The market. Okay, what do we do here? Monitor. Okay. Breakout came from 2 more range that has a no excess low. Current monthly bar has no excess at the lows. June has no access. This has a good access at the high. Current buy has a really good access at the high. As long as it doesn't come back inside this range, the trade is to the upside. Markets remain to the upside. Now the weekly. Weekly is going to be, seems like it is going to be, this is better, I think, doing this way than doing one at a time. One time frame higher has ended inside. Okay, inside bar has resolved. Is that a word? To the downside. The market is still inside the 2-week range. Breakout level. Weekly breakout level at 43.7, 43.5. I have no more, upside trend remains. Look for P for market. Look for watch, not look, watch for P for short. No, I'm just getting too much. I'm looking too much. It's not. Sometimes the simple the better. Okay, daily, one time frame in lower has ended. Can you see how time frames can be different? Right? The weekly was going to the downside and to the upside. The trend was to the upside in the weekly, and now that trend is over. The trend to the upside is over in the weekly time frame. Now, the daily time frame was going to the downside. That trend is over. Okay, those two things, two time frames doing different things. The monthly, I cannot say that the monthly is trending to the upside. No, this is just the second month. All right, July will say something. Will give us more information here if a trend to the upside is actually in this market. Sideways trading, it's not a good. I don't think this is such a good sign. If there's a sideways trading. Okay, in the monthly time frame, one time frame lower has ended. Breakout level has not been tested. Breakout level has not been tested. Lower references in the lower side are 6, 9, and 12. And they have no access. That have no access. Which are no access lows, weak lows, meaning reaction to the downside has not been completed yet. Today 1, 2, 3. Today clear or remove. notice the potential, notice the firecracker effect of the last 4 days of the last week highs. This thing, these highs that we were talking a lot about, this one, being so close together. The firecracker effect is the market just taking these highs out, these shorts being squeezed to the upside. A spike here to the upside. Always monitor those kind of movements. When the spikes are kind of fast bursts to the upside, are a sign that could be a sign that movement could be coming to an end, because those are shorts throwing the tower. But I don't think this is going to happen here. The market can come all the way up to here to do that, or maybe even take this high for that to happen. I'm not saying that's going to happen. Okay, this high is weak, mechanical high being sold from this high is market selling from this high weakens this one. It adds more stops to this one. Notice how close. In the daily time frame, these are too close. Okay, daily time frame, these highs are too close. Let's see if I can effect on the last week highs. From the last week highs. Okay, now let me move this one inside, copy inside this. And now I'm going to do a screenshot of man, this is crazy. I don't need this. I know there's multiple this. I don't need this one. I'm still. Let's see if I can take the weekly. Oh man, there's still 1, 2, 3, 4, 5. Yeah, I still need this one here. I want to see. The only reason why I'm keeping this overnight is because I want to see this. Remember, anyway, remember this, prominent. How much volume here? Almost 250. That's good. That's a good amount. Oh boy, these are matching highs here. Okay. Market profile. I want to take a screenshot of these levels, because when the market changes, okay, let me see. I got this one. Oh, what I have here is this inventory here. The matching highs here. Notice all the matching highs here, and the lack of excess here on the upper side. Also, there's no excess here and no excess here these days, in back-to-back days. This could be there could be something here as well. If the market comes back and check towards this area, I will pay special attention to this, but it has to take the 4,500 as well. and the relevance of this level, it cannot be underestimated as well. This is the range. This is a 2-week range. This is the low of the 2-week range. Right? A gap here. There's a gap here. Gap. Now I'm going to put this gap here so I can see better here. And high, one tick from overnight high. This is not, boy, this is, I don't think this is a serious selling going on here. Not a serious selling, not a serious buying here. Okay. Yes, I'm going to remember the question that we were asking ourselves about. You know, is this buying serious here? Okay. Is the buying serious? A day that has multiple distributions is a very emotional, very, very emotional day. And does it have volume? If volume joins the movement, this is questionable high with a non-XX. Can you see? This is the questionable high that has no exercise high. All right, no exercise high. Now we have one. We have checked this one already. We know that this is the 7 distributions, 2, 3, 4, 5, 6, 7 distributions. This market has 7 distributions here. Very emotional trade. Volume. What happened with the volume? It's a little bit higher, but it's still low. Can you see this is last week? 1, 2, 3 weeks, 3 days to the previous days. This is the last 10 days. Okay, let's see. Let's check. No, it's still very low. No, it's higher than yesterday, but it's very low relative to the rest of the week or to previous week. It's very low. Notice how the lows also. You know, when this is the opening. The market doesn't have volume at the opening. Notice this day. Well, this is closing contract. This one could have something, but there is nothing here. Yeah, I'm very short term. So I don't think that this, correction of the correction is has anything serious here. I mean, we were asking ourselves. If these shorts here, if these longs that are replacing these weak longs here are stronger ones, are stronger than this, the answer is, it is unlikely to be a yes. That these are stronger buyers than the way we have the previous week, because of the way how it has happened. Okay, the way it has happened, and the lack of volume here. There's no volume. This looks more like a short covering here. Now, if there is sideways trading here, some of this is very, very elongated to the upside. Some of these distributions could be close, maybe all the way to the 4,400. If there is some sideways trading here, and a range is formed, there could be more downside in this market. What's going to happen? I think Chairman Powell tomorrow or today. Now it is already 1:20 a.m. in the morning Eastern time, and Chairman Powell tomorrow, today and tomorrow. What else? I guess we have GDP on Thursday and as well. And the most important thing, PCE on Friday. 8:30, PCE on Friday. All right. I don't think that the action to the upside has been completed. However, the market may be too long now because there's no excess at the high, no excess. This is weak and poor. Oh boy, this is weak and poor. Weak and poors have good odds to have an upside continuation. Okay, this is weak. Poor. Why is weak? Because it has no excess, but because it was sold from this high. Okay, why is poor? Because it has no excess. Okay, so it has good odds the market will be taking. But however, as I say, the market may have got may be too long at this moment, to keep going high. Notice how you know how these things works, right? There's potential for upside continuation here, but it just went too high, too fast. It's too much, too far, too fast here. What happened today, and there could be some correction of this one tomorrow or the upcoming days, or next week, or this or what happened today. Could be Friday, or PCE Friday. What happened next week? What is there out? Let me check what do we have next week. Next week, Monday, ISM. Next week we have FOMC minutes. Huh. Remember Chairman Powell was, you remember what I said that could be some rate increases in the horizon. We have ISM, non-farm payrolls. Guys, the next week is going to be packed, man. You got Friday, non-farm payrolls, ISMs on Thursday, FOMC on Wednesday, Bank of Australia rate decision as well, ISM on Monday. Boy, okay. Be prepared for next week. There could be something here. Yeah, this high can be taken, and this one as well. This lows. This week is what is left of the week has a lot of things, and the next week has also a lot of things going on. All right. Now let's put here. Let's put our seller for tomorrow. Seller is 44.1875. 44.1875. What is last? 44.1475. 44.1475. Seller last. 4400 is down here. Super elongated to the outside. We will be looking to the outside. I don't know. I guess there's a lot of trading. It's still going. Could happen around the 4400. We have a gap up here. High. Yeah, good access at the high though. Good access at the high. This high happened. This high happened right at the opening. The market has a spike in the overnight and was sold. Just nice transition there. What else? Oh, I didn't write anything. market profile. We got what we have here. Very emotional day. Traders, shorts were forced to cover okay, the market went from too short to short to too short to too long too fast too much. Okay, volume it's not backing. Upside movement it's not being backed by volume, a sign of what is this? Short covering more. More potent than more potent. Okay. What do I have for tomorrow? What do I expect for tomorrow? Okay, let's check. Again, let's check. Some correction. Tomorrow, what? Oh, yeah, I'm going to be watching tomorrow this high and the 4400. I mean, the whole range could be. This I got new. I have some bias to the upside, but the low side is very questionable. Very questionable here. Mechanical low here. Very questionable. This could be a removal of short or shorts here. But I am neutral in this market. I am very neutral. I am neutral. as I can be. I try to remain calm. Watch, try to be in sync with the market. Do your homework. Remain focused. Be patient. Well, have patience or be patient. Okay, whatever. All right. I guess that's it for today. I hope this helps for tomorrow. Let's see what's happening right now in this market. What's happening? Okay, there's some removal, some rebalancing of this inventory. 1, 2, 3 distributions have been closed. Getting inside this distribution targets the lower side in this intraday. The market has been sold from settled. There is market's getting is inventory is super short. It's not super short. Inventory is 100% short on this overnight. As there could be some trades have get too long here. Barely, notice this level is super weak here. There could be some liquidation of these longs here. This is the laggards. These are the laggard part of the trade. The super long, the market got long, and they cannot help themselves and start buying here, buy from these mechanical levels. And this market could monitor if there is some trade to the downside. Monitor for continuation. We have the 4400, which happens to be also held back. This market has been bought from held back here before. Remember, the method was corrected, and this is also a mechanical low, as is this one. The trade was conducted mechanically yesterday. There's a lot of congestion in the day. Something that I haven't made is I didn't grab my histogram. Let's do this. Is Tuesday, June 27, and let's see what it is. Tuesday is this one. Just have to put it here. Tuesday. Okay. One of the most important things, remember, one of the most important things that we have to learn is monitor for continuation. That's a very important skill we have to learn. Monitor for continuation, okay? Have is as important as it is location here. All right. This could be the breakout. For example, if the market comes back and opens in this area, what I will see here is the breakout here. If I go long here, I know the super long, the risk is super high. I will expect, if the market comes back out, keeps going to the upside, this is a good location here. There could be some retracement below this. What's my exit if I take a long, which I know is risky, right? Which I know is risky. If the market comes back inside of this range, that's an out. These loans are being removed now. We have the 4400 held back. Very emotional. I don't trust this days. Just be careful. Very careful if you have anything going on to the upside here. Okay. We have inventories that's super short from this day. Remember, we have a very wide non-revisit prominent POC here and here as well. A bunch of stops here, and pretty much weak short inventory here. All right, I hope this helps. I wish you guys a good rest, a good trading day starting now. Today is we are already Wednesday. I wish you the best. All right. See you the next stream. See you in the next video. Questions? Um. If you have any questions, what can I have a Twitter account that I haven't that I pretty much don't use, right? But you wanna post something there? Let me pull this out. What it is? E-mini SP 500. I don't know how to take it. Okay, let's see. Twitter. Okay, this is my account. E-mini dash. What's this under dash or whatever? I don't know what it's called. SP 500. As you can see, I haven't posted in a while. I guess the last time I posted something was in March. But if you have any questions, just you can tag me in here. Alright. Okay guys. As I say, I don't know how many times I'm going to say goodbye. I hope this is the last time. See you. Have a wonderful day. Bye bye.